All right, I think I'm live at this point. I'm hoping everyone can hear me. I see the chat board, so let me know if you guys can hear my audio right now. I just want to make sure that I'm transmitting it out there. I see a couple questions here about Tesla. I see live by John. And John, are you hearing me? Okay, fantastic. Okay. Now that we have that established, I guess I can start chatting about some of the stuff that I see you guys typing there. So, Tesla, I see everyone's bringing up Tesla. We can go ahead and talk that. So, I literally just finished recording an episode for the show with Jesse Felder, and this was one of the things that we were both talking about was Tesla. And Jesse's opinion and my opinion is that we think it's completely in the realm of possible that we have the Saudi wealth fund maybe make an investment. And we kind of saw that as maybe being, great argument for them to hedge their position in oil is go after maybe owning something like Tesla, owning a lot of the IP around Tesla. Even though the price for most people is crazy and Tesla is highly leveraged. All the numbers kind of point towards the fact that it should probably go bankrupt. Um, I don't know. Jesse and I were both kind of at the point where we were thinking, Elon just kind of always seems to figure out a way to continue to get by. So we weren't saying that we would short it. I wouldn't short it, but I think he's got a real challenge on his hands moving forward. So I'm kind of curious what you guys think. Go ahead and type it into the message board, and we can talk that. But I think that I think he's scrambling right now. If I had to really be quite frank, I think he's scrambling to come up with something because I think the tweet was definitely not the right protocol. I think he could still get himself into some trouble with the SEC by the mechanism in which he released public information. I don't think that Twitter's the primary way to go about doing that. So he could find himself in a little bit of trouble with some of that stuff. So we'll see what happens. Funding not secured. Yeah, you're exactly right, John. It seems like you know he had some talks and it was not in a position where it's secured, but who knows what's going to happen. I know one thing. I don't have a position either way, and I like to try to keep it that way when you get into things that could be so binary. Okay, I see I kind of expected some people wanting to talk crypto. That's that one's pretty hot and heavy these days. Uh, I see a question there about how to build a mini Berkshire. Well, let me talk the crypto thing real fast. So, since about mid December, I've been pretty pessimistic and December of this past year, pessimistic about crypto simply because I think that the interest was far outstripping um, basically the buying was far outstripping the capacity for that interest, that level of interest to continue buying. I was basing a lot of that opinion on if you ever go to the Mayor Multiple website, that was the prime catalyst for why I sold my position back in December. Um, and this was, crypto hasn't been around very long. So my opinion was that we were going to see something very similar to what we saw back in 2014, 2015, where it takes a good year for that to basically correct itself. I am still a very big fan of crypto in general. I more specifically Bitcoin, to be quite honest with you. I think a lot of the other stuff has a lot of things to be no, learned, shaken out. I think my concern with Bitcoin moving into the future is really kind of how the energy consumption kind of plays into things. If it would scale and start going back on a climb like we saw last year, but I think for the time being, I think that sitting back and kind of watching how things shake out for the coming months is probably the best strategy to have for that. Um, whenever we get into 2019, that's probably when I'm going to pay a little bit closer attention to Bitcoin specifically. Ethereum, I don't feel like I understand the technology well enough to maybe take a position in that, but I think that I am comfortable taking a position in Bitcoin if I felt like it was at a bottom, which I don't necessarily feel that we're there right now. Hopefully that answers the question on Bitcoin. I'll talk the precious metals thing because I was talking that with Jesse Felder tonight as well. So our last mastermind group, I brought up gold and my interest in taking a position in gold. I ended up taking a small position. Well, it was a decent sized position. Probably 2 months ago, the price was probably at around, I can't remember. It was about 5% higher than where it is now. And I quickly got stopped out of that position because it's continuing to go down. So I lost some money there, which wasn't pleasant. But, I was asking Jesse tonight, I was like, how do you feel about this? Because I know he's pretty bullish on gold. And his opinion was, when especially in gold and commodities, when you have just a massive surge of bearishness, that's typically the best time to start taking a position and start growing a position, whether it's small or whatnot, if you want to kind of ease into it. And he kind of feels like we're there right now. But I will tell you one thing: the trend over the last month and a half has been very negative. I think most of it's being driven by the fact that the dollar's been so strong and the yuan is having such a huge devaluation. My personal opinion, and I don't feel like I have a lot of facts to back this up, but I think a lot of it's being driven by the trade war that's happening between the U.S. and China right now. I think once you get to a breaking point where one side folds, I think that that might drive the transition of dollar weakening, and then you kind of see the price of gold take off. So I'm kind of sitting on the sidelines, waiting for something to precipitate out of that. My expectation is that gold could maybe even push a little bit lower, but I think you're getting to a point where maybe it's starting to look pretty juicy for a pretty big return in the coming 2 to 3 years. But I do not have a position on that. I can't say I don't have a position. I have a long-term 2-year call option, but as far as like going in and buying like GLD or something like that, I don't have that position on right now. Let's see here. Okay. How many people? Oh, we got 62 people in here. This is awesome. Okay. Recommend dollar cost averaging at these levels. We also Jesse Felder and I also had a conversation about that tonight. He his opinion on it, and I agree with his opinion, is that with indexing and ETFs and the way the ETFs are structured, the big narrative, and he said if you go back to 2000, you go back to 2007, the market gets in these big cycles and these big booms, and at the top of them there's this big driving narrative, and he related this back to George Soros, that really keeps something afloat. His opinion is right now the narrative keeping things afloat is if you just buy an ETF and you just buy the index and you continue to do that over the long haul and you just dollar cost average it, everything's going to end up being okay. Like that's the narrative that he thinks is just blatantly false right now. And he said if you go back to 1990 and you look at how the Japanese market had performed from then until now, you would have lost money if you were trying to dollar cost average an ETF or an index. And I think that that's a pretty interesting narrative, and I agree with it. So I don't know how it's gonna shake out, but I thought that was kind of an entertaining way to think about things, and some food for thought for people that are just spewing the dollar cost averaging narrative. I see Rajiv's question there, beginner question. Which method should I follow to get intrinsic value, EPS method or book value? This really depends on the type of business that you're valuing. If you get into banks, a lot of the times you're looking at the book value, the balance sheet, what that looks like. Where other businesses you're kind of looking at the free cash flow. Uh, For me, I go back to a discount cash flow model off of the free cash flow of the business a lot. That's probably my primary way to look at things. If I'm doing value investing, when you get into momentum investing and stuff like that, you're really kind of looking more at the top line and the expectation for growth moving forward. Hopefully, some of that helps. Um, let's see here. Mini Berkshire. What's the question you got there, Anor Allen? You got a question about Mini Berkshire. What do you mean by that? Are you suggesting who do I think the next Mini Berkshire is? Is that what you're asking? Paying interest again. What are your thoughts on the current micro macro influencers of oil prices? I don't really have an opinion on that one. I think that you know, I will talk about inflation. I think that you know, right now we're at max employment. I mean, really, when you take a look at it, you've got the employment sector just completely maxed out at 4%. You have a trade war that's happening between China and the United States. And well, Europe was in there, but it seems like they've come to some type of agreement. That is bad for prices. That's going to drive prices higher, which means your inflation is going to go up. And if that's true, commodities tend to go up in those kind of environments. Um, I don't, I see the commodity index. I see oil kind of like plateauing at this point, but I wouldn't be surprised to see oil and some of those factors kind of going higher in the year to come. But we'll see what happens. Yeah, and Matthew Morgan, I completely agree with your comment. Markel is the next mini Berkshire in your opinion and mine as well. I was fortunate enough to go to the Markel annual meeting this past year in May out in Omaha, and I was thoroughly, thoroughly impressed with that company. When you look at the numbers of how they're growing their company, their business model, their culture, everything is man, it is really similar to Berkshire Hathaway. In fact, I kind of enjoyed their meeting better than the Berkshire meeting. It's the for people if you're interested, if you ever go to the Berkshire meeting, that occurs on a Saturday, and then the Markel meeting happens the next day on Sunday in the morning. I don't. I'm not following the Netflix CFO thing. Can't comment on that. How much higher can interest rates go in 2020? I don't know how to answer that, but I will say this: my expectation is that rates are going to go higher, and I think most people would probably agree with that, which typically means you might be on the wrong side of the trade. But I think that because of my expectation for inflation that's coming out of the trade, the fact that we're at max participation in the labor market and things like that, I think that interest rates are way behind where inflation's at with the economy. So yeah, I think interest rates can go a lot higher, but I think the thing that really goes into play is how much longer, how much higher can rates go before it has a major impact on the equity market. I don't think they can go way too much higher. I think if the 10-year treasury is at 4%, I think you're going to really start to see the equity market have a lot of issues at that point. But there's people out there that might completely disagree with that. So it's hard for me to say where it's going to be in 2020 because I think it really depends more on um, the speed at which the 10-year treasury and the other interest rates, whether it's the 30 or the federal funds rate, how they mature and how the speed at which they come up. If it's a really slow, gradual thing, then it might be able to happen. But all the stuff on the fiscal side and all the stuff on the political side are suggesting that it's going to come up maybe a little bit faster than what I think maybe the market's valuing it. Okay. I'm gonna probably do another 10 minutes here. Uh, what other kind of questions you guys got? Yes. June Wu, long Bitcoin, 10 plus years. Yes, as of today, I am. But I am not bullish on Bitcoin in the next 3 months. I will tell you that much. Can you get Jeff Gunlock on the podcast? We've reached out to him before. I would love to have him on. I'm a huge fan. If you know him, please send him my information. What is the most important thing we could learn from Warren Buffett? Um, I mean, I look at this a little bit differently. I think that the thing that I value most about Warren Buffett is really kind of his ethics and his the way that he just presents himself. And I think that when you look at all the money that he's giving back into the Gates Foundation and things like that, a lot of his charitableness comes from a book called The Gospel of Wealth. It's not a long read. It was written by Andrew Carnegie. I highly, highly recommend that book, especially for anybody that has a high net worth. I think it's an important read. I don't know if that's what you were looking for. That you might be looking for something more on the financial side. If you are looking for something on the financial side, I would tell you, I think the most important thing that you can take away from Warren Buffett is that you look at one share the same way as you look at valuing the entire business. When you take that leap and you start looking at one share as if it, is a small little business you can put in your hand and it has a small little profit and you're paying $20 to own it. So what kind of return does that give you? When you start thinking about things from that vantage point, I think it really changes a lot for you to be much more thoughtful in the way that you treat it, because now you're treating it like a business you'd buy on Main Street. And I think that's the most important thing you can learn from Warren Buffett's investing approach. Investing finances. Well, so I see a comment here. I'm new to your channel and I want to learn about investing and finances, both businesses and personal. Where do you recommend I start? I am very biased in this opinion. I have a Buffett's Books channel. They go to buffettsbooks.com. There's, I don't know, 30 videos, 35 videos on the website there, 100% free. Go through those videos in order. You don't have to sign up. You don't have to do anything. I built those purely to help people learn from knowing nothing to doing discount cash flow models based on, interest rates and all sorts of stuff. So I think that will help you out a ton. Uh, Monish Pabrai's aim for his personal investment rate of return is 26% per annum. What's yours? uh, I don't know that I've necessarily said it that way. I just kind of look at what the market's producing because, like right now where we're at with interest rates at, you know, less than 3%, and the market capitalized at a similar return. If you're knocking out 26% annually, I mean, you're taking on a whole lot of risk somewhere, in my personal opinion, if you're in public markets that are, a large market cap. Now, if you're down in, small cap or you're making operational investments, yeah, sure, I think that you can get those kind of returns, but it's a function of how you're employing your capital and at what capitalization rate. If you're going after large cap stuff, it's really a function of where the market's at and how the Fed's manipulated the market to give you the opportunity to achieve 26% returns. Thoughts on the yield curve? Yeah, I mean the short tail of the yield curve is coming up like a flipping rocket ship. So I think that trend's going to continue. And I think what's interesting is you're seeing the long tail just kind of sitting flat. I think when you look around the world at all these other marketplaces where you can buy a 30-year bond, you're not getting any kind of yield like you are here in the U.S. So I see that continuing to be bid, and I see it staying fairly flat and maybe coming up a little bit, but nothing like the front end of the yield curve. Hopefully that answers your question there. Uh, let's see here. What's my top read for 2018? The book that just pops into my head more than anything else is The Creative Curve. I thoroughly enjoyed that book. It was really good, especially if you're in a business where you have to be creative on a consistent basis. I think that Allen knocked that book out of the ballpark. I thoroughly enjoyed it, and I really recommend that book. It was good. Uh, Top two books on my bookshelf. Holy man. I don't know. That's only some of them. I've got others. I got other bookshelves. uh I'll tell you one for sure is I keep going back to The Power of Habit. This book for me is really such a crucial read for people because I don't think people realize how profound their subconscious thoughts are and how much they drive a person's behavior and really kind of drive their outcome. And until I read that book and kind of really dug a lot deeper on how my subconscious works, um, I think that there is really some huge nuggets to be captured out of that book. So I would definitely put that one up there. Another book that for me was really influential was a book called Influence by Robert Cialdini. I'm sure most people have heard of that book, but um, you tend to look at the world a little bit differently after reading that book. Let's see here. So Newman, I like your question. How do I start a business? Well, let me give you a tip. Don't ever start a business that you don't have an absolute love for. If it's not a product or a service that you just genuinely love doing on a day-to-day basis, don't ever do it because when you start your own business, the thing that people don't tell you is you're going to work stupid hours. You're going to work hours that you never dreamed of. And if you don't love what you're doing, man, you're just dead on arrival. So I would tell you to this is a piece of advice I give people is get a piece of paper, draw a line down the middle of the piece of paper. On the left side, 1, 2, 3, and then on the right side, 1, 2, 3. And what you do is you list the three things that you're just really good at. Like, what are you good at? Math? Are you good at writing? Just list those things down. 1, 2, 3. And then on the other side, list something that you just have a deep interest in. Maybe you love cars. Maybe you love whatever. And then the idea of is how can you marry those two columns up and wrap a business around something like that? But uh, it is not easy. There's a lot of people in this world all competing to create their own thing. And I wish you best of luck. Hopefully that helps you out. Thought on the Turkish lira. I really don't have enough information on that one to speak intelligently. Um, but I will tell you, I have a friend that this was probably, oh man, a year and a half ago. We were on a trip together. He's from Turkey, and we were on a trip together a year and a half ago, and the lira was getting crushed back then. I can only imagine how he's feeling right now. I mean, it is just devastating over there. And I kind of feel, and this is based on absolutely no facts. Okay, so don't take this with too much significance, but I kind of feel like it's maybe something deeper than what meets the eye with respect to currencies and what's kind of playing out right now. I really think that we're about to see some interesting things start to happen here in currencies in the coming 5 years, coming 2 years. What's the role of luck in investing? I don't know, but I will tell you this: there's a do a Google search for this. Type in luck. Tony Hsieh, the founder of Zappos, has like a one pager on luck. See if you can find it. I think I might have posted something on Twitter a couple years ago on this. So you might even type in my name with the search and there'll be something that comes up. That's the best thing I've ever read on the idea of luck. It's quite fascinating. Uh, how do we profit from a tariff war? Well, I think the way that you think through this is what results out of a tariff war: wages, the cost of goods go up. So how can you position yourself around that narrative? And you know, I could give you some different ideas. I hate to say this because I hate to tell people that I short things, especially on the show, because I don't want people to go out and put on the same trade. But I've been shorting China through a lot of this. Now I might turn that off if I see that one side of this trade dispute kind of fizzles out. But I really hate to kind of talk about the positions that I have around that because a lot of them are shorting. I don't recommend shorting. I'm doing it through an ETF. I'm not doing like individual companies. I don't ever recommend shorting individual companies. I only do it through ETF vehicles, but just don't short it. You'll find yourself, you know, just don't do it. How do you get shredded? I don't know that I can answer that one, man. I'm not shredded, so I can't answer that. All I do is I bike 30 minutes a day. I do 100 push-ups, 100 sit-ups, and that's my workout, and I can knock it out in about 40 minutes. Yeah, Andy, I do options. I don't I subscribe to the Jewel Greenblatt option strategy, methodology, way of thinking. Um I highly recommend I highly recommend that you check out his book. You can be a stock market genius. That will give you the best, in my opinion, the best way to conduct options trading. I always do it through leaps, which are 2-year options, because I don't feel like my ability to call an option or to basically predict when an option is going to mature or reach what I think the direction it's going to go in a short duration. I think I can only have maybe an insight in within a 2-year window. So that's why I recommend that. What do I think about Forex? I don't think that I know enough about it to speak intelligently, to be quite honest with you. I just kind of pay attention to the trends. So Wes Gray, my buddy, and him, Patrick O'Shaughnessy, James O'Shaughnessy, they're real big on mixing value investing with momentum investing. And, Wes told me one time, he says, that I think one of the best ways to implement momentum is if the 10-year or the 10-day moving average is higher than all he does is he looks at the 10-day moving average and compares it to the 100-day moving average. And when one's above the other, that's whenever he puts on the position from a momentum standpoint. He says it's very effective. So, and I would tend to agree with that in general terms. So if you're trading currencies, that's maybe the way to think about it. Uh, One more comment on the currency trading, the Forex stuff. Stan Druckenmiller, it has a quote out there that says that currencies and commodities typically move in about 3-year time periods. So if you've seen a big move in oil or something that's lasted 3 to 4 years or something like that, you're probably at a point where it's probably getting ready to go the other way. Well, oh, that's it. I was going to do 30 minutes. It's getting late here. I'm going to go to bed. Um, I really appreciate the questions. We had quite a good crowd of people in here. Hopefully that some of my responses were decent. Hopefully I didn't dodge too many questions. Oh, here, I'll answer one more. What is the best way a 19-year-old with not a lot of money can get started in investing? This is what I'll tell you. Rajveer, this is what I'll tell you. Spend your money because you don't have a lot because you're 19 years old, or I'm assuming you don't have a lot. Spend your money on books. Okay. If you look behind me, you can see it's all about reading, man. It's all about reading as much as you possibly can and getting your hands on things. Um, I've read books that have made hundreds of thousands of dollars for me by just reading one book. And unfortunately, you might have to go through 100 or two before you find a book like that. But you're going to find a book that's going to be extremely powerful for you. And going back to the book that I previously mentioned, The Power of Habit, figure out how you can set up a routine so that you read on a consistent basis. Some people are audible books. I'm one of those kind of people. Other people have to read the hard copy. It really depends on the way that your brain's wired. But I think the numbers around 30 to 40% of people are audible type people. They learn through hearing, and I'm one of those people. And so, every book that I have on the shelf I have a lot of them in Audible books as well. I get both, but that's what I'll tell you. Spend your money on that, and what you might find is it's going to teach you different ideas. It's going to teach you things to maybe stand up your own business. It's going to teach you how to go about things in the right way. And there's just a lot to be said for reading a book that somebody has put their blood, sweat, and tears into creating, that took them years to write, opposed to reading some article that's maybe only 3 paragraphs long and just kind of basing your opinion on that. I think something that's really um, created maybe some type of psychological bias towards wanting information extremely fast with the internet and the way that we're using smartphones could maybe be a huge setback for a lot of people, especially in the younger generation. That if you're not learning that way and you're learning more in a traditional style of dedicating a week or 2 weeks to an entire book, I think there's a lot to be said for that, and I think that maybe your generation is missing out on that advantage. So I hope that helps, guys. Thanks for joining me. I'll probably do this again some other time. I don't know. I just kind of do this randomly whenever I have a free moment, but I enjoy interacting with you guys and seeing the questions. I wish we could meet face to face and kind of have a conversation instead of reading the text streams. But really appreciate all the kind comments there. Thanks, guys.